Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. We're back. The stock market's open. What's going on today? Well, not a whole lot. Everything's kind of flat. The Dow's flat. The S&P's flat. Nasdaq's down a little, down about 100. Now, I could argue both directions in the stock market. I could argue that we're going to go parabolic from here. I could argue that we're going to come back down and touch the 200-week moving averages. And we're really at a pivotal point in the stock market. We have a gap above that still needs to be filled, and we have a couple of gaps below that need to be filled. My guess is we're going to probably go sideways now for just a little while. This week is a last week of the quarter. Maybe they get a little bit more rally in the stock market. Now the stock market, the S&P is sitting right on the 20-day moving average, and the 50-day is right above that. Now maybe it moves up and touches that 50-day, and then maybe it comes down and hits the 200-week moving average before we get that big short covering rally that I'm talking about. I think they're going to push this market back up, maybe even to all-time highs, or at least close to the all-time highs. Look at the Federal Reserve. They're still buying, they're still buying bonds. They're still buying. They say they're tapering, but if you go to their balance sheet, they're still purchasing bonds. Okay, now they are raising interest rates, right? They raised it. We're at 1.5%. Okay, they raised it, but it kind of offsets itself if they're still buying bonds. So we'll see what happens there. But I do think that we could have another flush out in this marketplace before we get pushed up to new highs, new record high. Wouldn't that be something? Look at the Dow Jones. Really, what is it? We had a 6% rally last week. Dow Jones never even touched the 20%, which puts it in a bear market. So the Dow Jones is only down 14%. Still pretty much in a bull market. This bull market might not be over. We'll see how that plays out. But I really am sitting in, mostly cash right now. I have a lot of, purchasing power, and I'm waiting to see if we get that pullback. Now, I do have a couple of small positions. I'm very small, that just in case we do get that rally up, I don't want to completely miss it. But I think we could get a pullback down to that 200-week moving average, and that's where I'll be putting my money to work if we get down there. Right now, I'm sitting in a lot of cash. Okay, let's move on to the real estate market. Now, I want to show you something here. Now, this is, once again, this is just my area. This isn't your area. This is it's an ad from Lennar Homes, and it says, "Hello, summer. Hello, new savings." All right, let me just show you what's going on. And this is the new home market, and this is in my area. I'm sure in your area, new homes are not coming down. But anyways, these have dropped already $100,000. They were listed at $784,000. Now they're $684,000, right? But that's not all. They're giving you $30,000 to buy down your interest rate on your loan. So they're giving $130,000 on a $700,000 home. Now, some of these homes in different areas. Here's one in Tracy. They dropped it from 860 to 760. Okay, so anyways, my point is that they're not getting these homes sold. These homes are done. They're waiting for someone to move into them, but there's no offers. There's no buyers. There's zero offers. Okay, so they have to reduce the price. Now, how Lennar works, they sell in phases. So let's say you were in one of the phases where you had bought it $780, and now you see the next phase just open. It's the same floor plan. It's pretty much right next door to you for $680,000. Now, do you have any remorse? Plus, they're giving $30,000 away for either closing costs or to buy the interest rate down. So you just lost $130,000 if you were one of the early purchasers, right? Now, this is how new homes work. Now, new homes are down 26% year over year, not price, in volume. And we're getting that in the same volume in certain areas. For example, I live in the Bay Area. Now, in San Jose, the San Jose has declined by 25% year over year sales volume, right? Now, we're in May right now. We're in June, excuse me. We are in June, and we're going into, we're going into July already. The time's just flying. But anyways, in May, we were down 25% in sales volume. Now, May is a very hot month. month, a very hot market. Things should be booming. If the economy is so good, why aren't we booming? Well, we're not booming because no one can afford to buy homes and nobody's getting offers. And if you were one of the people that, you bid up over asking price when you go to sell that property now, you're already going to take a loss. You're going to take a hit. This is negative equity is coming your way. Now, people are not happy about this. Now, where am I seeing a lot of homes? A lot of homes are just sitting there. It's in the luxury home market. The luxury home market. Now, my area, luxury home might go for $5 million. Now, maybe your area, luxury homes, anything over $1 million. But these homes are just sitting there. I mean, they're open houses. They have open houses. They put out, 20, 30 signs for the open house to get you to come into the home. But nobody's there. It's a ghost town. Luxury homes are down 18% year over year, and they're just sitting there. But what I'm seeing now is these price reductions. Okay, price reductions are coming in on these luxury homes. Now, luxury homes, some of these are having $200,000, $300,000, $400,000 price reductions now in the area. Okay, so maybe it was at $3 million, now it's at $2.6 million, right? I mean, it's still way overpriced, but they're not getting any offers. They're not getting any buyers. And there's a lot of these homes. I mean, I'm surprised at how many of these there are. And they're just sitting there. I mean, you can go to a nice area around here and on a Saturday or Sunday, and you go to a major intersection, and the real estate agents, we're fighting to get our signs there. They're running out of spaces for sale signs, for all these open house signs. There's no room left to put your sign there because everybody else has theirs there. Now, what's causing this? Well, what do we got? What's causing that there's buyers that have just gone away? Well, we got the soaring interest rates. Interest rates are soaring. And when the interest rates soar, what happens to demand? It falls off a cliff. It just drops right off a cliff. It's that simple. There's no demand. Now, you got a lot of these big names, like Dave Ramsey. He's saying, get out there, hurry up and buy one of these. Now, I'm not sure why you want to hurry up and buy one of these. Now, Susie Orman, she's great. Oh, yeah, in a recession, real estate does very well. Well, I think this recession might be different. It might be different this time. This recession's going to hurt a lot of people. A lot of people are going to lose their jobs. A lot of people are not going to make their mortgage payments. There's going to be a lot of foreclosures coming onto the marketplace. I mean, we got inventory. It is skyrocketing right now. I mean, it's up over 100% in my area. Now, of course, your area, there's no inventory and prices are still high, and that's fine. And real estate is very localized, so I believe you. But in my area, we're getting a lot of properties coming onto the marketplace, and we don't have the buyers for them. So what's going to happen? Well, the logic would tell you that prices will start to come down, and they already are. I'm getting flooded with these price reductions, one after the other. My email is full. Price reduction, price reduction, price reduction. And the banks are coming after me. They're going, hey, Mike, get onboarded with us. We're going to be taking back a lot of these properties in short sales, and we're going to put them back onto the marketplace. There's going to be this inventory. It's already happening. It's already happening. By the end of the year, the inventory could easily double or triple by the end of the year. If you can hold off just, till December, it's not that far away. What is that, 6 months? I think you're going to get a real bargain. I think next year's going to be some super bargains as that inventory starts to pile on, as the foreclosure process starts to take effect. I mean, think about it. Now, for the last 18 months, last 2.5 years, there's really been no foreclosures because we aren't allowed to do foreclosures yet because of forbearance. Forbearance. Now, why are they allowing the forbearance to go so long? Well, it's simple. The banks really don't want the houses back. They took the houses back in 2008. They didn't know what to do with them, so we had these things called short sales, and I did a lot of short sales back then. But now the bank's going, we don't even want the properties back. You don't have to pay. Oh, really? I think the process is going to start soon. I think they're going to have to pay. I think the banks are going to take the properties back in foreclosure, and I think they're going to give them to agents like myself, and we're going to dump them on the market at a lower price so that the bank can get out of the property. It's just how it works. It's a cycle, and it plays itself out over time. And we'll see if it plays itself at this time. Now, this time I think the crash is going to be, well, I think it's going to be a lot worse than the 2008 crash, but that's just because the bubble is so much bigger. The bubble keeps growing, it keeps expanding, but now the pins are starting to hit that bubble from all directions. We got interest rates going up. We got inventory going up. I mean, prices cannot stay elevated when this is happening. They really can't. Now, who knows? Maybe the Federal Reserve comes in and they just decide to buy every property that's out there. And that's a possibility. Look at that. I can't put anything past the Federal Reserve. They're buying stocks right now. They're buying bonds right now. They lie through their teeth. They say they're tapering. We say we're tapering, but you can go to their website. Go to their own website. Says they're not tapering. It says that they're increasing asset purchases. They're over $9 trillion in asset purchases right now. Assets on the books. And now what's fascinating is when they do start to taper, a lot of these assets have lost money. Look at bonds, for example. They bought all these bonds, right? But interest rates are up now, so the bonds have decreased in value. So when they go to sell these bonds, when they start the tapering process, they're going to lose money. Now, who pays for that? Well, guess what? Me and you pay for that. The Treasury reimburses the Fed for any losses they have. And that's our money. That's the taxpayer money. We have to pay for that. It gets me a little upset when I talk about this stuff. But back to houses. There's really no offers being made right now. I mean, there just isn't. It's come to a grind, come to a halt, come to a standstill. If you're a seller, you're out there trying to sell your house and you're not getting offers. What are you going to do? You're going to lower the price. It's a natural thing to do. Take my word for it. This takes time to play out. It's not going to happen tomorrow. It's not going to happen, next week. But we're in the midst. This is just getting started. Look at this is Lennar Homes. This is one of the largest home builders. They're dropping it $130,000 on a $700,000 house. That's a big drop. They're in trouble. They have to get out of these. They have too many homes. They're overbuilt. There's over 1 million new homes coming onto the market. This is the new homes. And people can't afford them. They have to get out of them because they have debt to pay off. Lennar has debt. They have to make their payment. If they don't make their payment, their stock's going to drop more than it already has. And it's already dropped a lot. You can go just LEN is a symbol. Look it up. See how they're doing this year. Not very well. We'll see if they can rebound. Maybe they can. Maybe they can get them all sold. But I don't think so. I think the market's changing. I think it's just getting started. I'd sit back, grab some popcorn and watch the show. It's a show right now, and it's not a pretty show. It's kind of a horror movie. Anyways, that was my rant for a Monday. I hope you enjoyed it. If you did, give me the thumbs up. Stock market kind of flat. Maybe we get a rally later this week. It's possible. We had that big rally last week, 6%. It's really, I could argue both ways. I got a lot of cash right now. That's where my position is. I'm in cash. That's my basic position. We'll see how that all plays out. Anyways, it's Monday. Get out there. Have a great Monday, everybody, and we'll talk again real soon. Bye-bye now.